Welcome everyone to Vested Interest. This is Shane back for another video. We're going to take a look at three stocks at 52-week at or near 52-week lows that may be presenting some value. But before we get in the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. And for those of you who may be stopping by for the first time, on this channel we focus on dividend growth investing, buying stocks in good companies that pay growing dividends, hold for the long term. It's not rocket science, my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing dollar cost average in dividend growth stocks into growing companies with positive cash flow that covers the dividend with a high return on their invested capital. I cover all my investments and activity in the portfolio on a weekly basis. So if you like that kind of content, don't forget to hit the subscribe button down below and join us on our Sunday morning updates every Sunday, 7:30 in the morning. It is free to see what I'm doing on this channel. We all have enough to pay for, but if you would like to help the channel, hit that thumbs up button below. Let me know what you think of the videos in the comment section. Don't forget to hit the subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community and hit that notification bell so you're notified whenever we put out any new content. So let's get into the video and take a look at these three companies that are at or near 52-week lows. So first up, we're going to take a look at one out of the utility sector. This is American Water Works Company, ticker AWK. Right, they're at $118.44, at least as of the close of business on Friday. So depending on where you watch this, they may be a different price. Their 52-week low was $114.25. So they're just above their 52-week low with a high of $153.43. They have a PE ratio. Well, let's start up here. Let's go with the earnings per share first. Or actually, let's even jump up further. We'll go up to market cap. They have a $23.10 billion market cap. EPS, earnings per share, sitting at $4.90 per share. In my opinion, for a utility company, this is a little on the high side for price earnings ratio, $24.17 per share. But I feel like these water companies are always that way. If you were to compare this to AWR, the last time we did a 52-week low video, AWR, very similar company, was one we covered. And their price earnings ratio was very similar. Forward PE is a little lower at $22.35 per share. Ex-dividend date, February 7th, so we've passed that. You would not be in line for their next dividend if you were to buy them now. We covered their 52-week low. Beta of 0.63. Analysts call it a consensus buy with a $151 target price. They see 27.49% potential upside on this one with the earnings date of April 24th. And you can see over here on the right, I clicked on the 1-year tab, and all this information is brought to you by stockanalysis.com. Very good site to go check out if you want to get some information on stocks. It's free. They do have a paid service where you can get a little bit more detail, but I really like their free service, and it presents a lot of good information, very easy to navigate and very easy to understand. I'm not affiliated with stockanalysis.com, just one of the sites that I like to go to, and I always recommend more than one site, so don't just blindly look at Stock Analysis as your only source. But going to their site, I clicked on the 1-year tab, and you can see here pretty volatile over the last year, right? Got up here in the 150 range. That's where that $153.43 back in here, back in April of last year. Big drop back in October. Looked like they tried to recover here around the beginning of the year, December into January, and then have been dropping ever since. Maybe they're leveling back out again, but right now, this is one that I just added to my portfolio. I picked up one share this week. So this position is one, so long as it stays down here close to their 52-week low, I am probably looking to build out over the next month and a half. Now, again, analyst forecast, we touched a little bit. They have a $151 target. They have a 27.49% potential upside. They call it a consensus buy. That's from 6 analysts that have taken a look at it. Now, their revenue forecasted growth over the next 5 years is 7.42%. Very nice revenue growth, especially for a utility company. And their earnings per share growth, I typically like 5% or better, is sitting at 7.36%. So it beats the metric that I'm looking for there. Now, continuing on with American Water, here you can see their revenue chart. Nice, steady growth. Looks like here from about 2012 to, what is that, 2018, 2019, they were a little bit on the decline, but since then that have been picking up. Last year was a pretty big jump up. I don't know exactly what that is about, but overall, pretty steady growth minus these couple of years of downturns here, a few years of downturns here. Very nice margins on this one. Gross margin 59.38%, operating margin 42.77%, pre-tax 35%, profit margin 22%. I mean, that's a very nice profit margin for a utility company that is very capital intensive at that. One thing I will say about American Water Works, they do have a lot of contracts with government facilities, so military bases, government institutions, government agencies. It looks like they provide a lot of their water as well as their retail arm, where they're providing to individual households and businesses. EBITDA at 62.99%, EBIT at 46%, and this is really one of the negatives I do see with them. Their free cash flow margin is down a little bit, so that is a little bit concerning. I'm assuming, again, being a capital intensive business, there will be fluctuations in a company like this with their free cash flow. And typically that has to do with them, repurposing or construction activities that they have, digging up, redoing old lines, putting in new lines, maintenance on their existing facilities. Dividend yield of 2.39%. Annual dividend is $2.83. So divide by 4. They are a quarterly payer. Again, ex-dividend date was February 7th. That quarterly payout ratio, I like 75% or less, so they're at 57.76. Lots of room to continue to increase this one with a very nice dividend growth at 8.02%. So that's American Water. Like them, again, I just added them to my portfolio. Number 2 on the list, Starbucks, and I know a lot of people have covered Starbucks, but it is looking rather attractive where it currently sits. It is not in my portfolio. I do not have a position in this company. Ticker SBUX. This is out of the consumer discretionary sector, sitting at $91.06. Looks like after hours on Friday, they were down a little bit more, $91.03. Their 52-week range is as low as $89.21. So they are very close to their 52-week low with a $115.48 high. Market cap of $103.1 billion. Revenue $36.69 billion. Net income $4.29 billion. I mean, you can read through these pretty much yourself, but we'll hit the high notes. Earnings per share sitting at $3.74. Price to earnings ratio sitting at 24.35. Now, I think this is more in line with a company that should have a little higher price to earnings ratio. They are growing still, even though they've been around since the 70s. They are trying to get out into other countries like China, though they are having some issues expanding into China. A lot of competition now. Dutch Bros, I know, is a big one that's coming up. That's a competition. I mean, there's around where I'm at, you can see a lot of mom and pops coffee places still. So it does have some competition, but huge brand recognition, right? Starbucks, when you think of coffee or tea, you're probably thinking Starbucks. Forward PE is a little lower than their current 24.35. Forward is $21.10. February 8th was the ex-dividend date, so you wouldn't be in line for the next dividend unless you already own them. A beta of 0.98, so just slightly. Both of the companies we looked at so far are pretty volatile. This one's just slightly less volatile than the overall market. Analysts call it a consensus buy. Price target of $113.65, so they see about a 24.81% increase from where it currently sits potentially. Next earnings date, April 30th. Again, clicked on the 1-year chart. Very volatile over the last year or so. Looks like they dropped down to about where they're at now, a little bit lower back in October. That's probably this 89.21 back in October, right? And they're right back against it now. So might be one that continues to go down if they continue to have issues. I know there's some issues around them potentially becoming unionized as well, which would dip into their margins a little bit. So that might be part of the weakness that we're seeing, as well as the issues that are going on over in China. Now, analysts forecast, again, price target of $113.65 with 24.81% upside potentially. They call it a consensus buy. That's from the 21 analysts that have taken a look at this. Now, their revenue, same thing, very nice revenue forecasted growth over the next 5 years, 10.46%. And earnings per share forecasted growth at 17.57%. Very, very good numbers overall for this one. Very interesting company. Might be one to take a look at. Let's keep going. A little bit more information. Revenue here, you can pretty much see up and to the right, right? Other than this 1 year in 2020, which we all know what happened back in 2020, they are pretty much nice, steadily growing their revenue every year. Margins, gross margin sitting at 68.44%, very nice. Operating margin 15.83, pre-tax 15.39, profit margin of 11.7, EBITDA at 20.98. Now, these margins, like your profit margin, already at 11.7, that is the only thing that gives me a little bit of a concern here. That's a little bit low for my taste. especially if they do become unionized, then it will eat into this profit margin a bit more. And that might be a little bit concerning because then a lot of the forecasted that are based on higher profit margins would need to be cut, and that would impact the price of the stock. EBITDA at 20.98, EBIT at 16.92, free cash flow margins at 12.26. Nice numbers overall for this one. Dividend yield at 2.5%, $2.28 on the year. So divide by 4, they are a quarterly payer. We saw the ex-dividend date was February 8th. Quarterly payer, like I said. Payout ratio again, 60.96. I like under 75%. So very, very safe dividend. Very much in favor, or the company is, of increasing this dividend, and they have plenty of room to do that. Dividend growth about the same as the last one we saw, 7.84%. And third on our list, last but certainly not least, we're going to take a look at General Mills, ticker GIS. This is out of the consumer staple sector. $65.26 per share, at least as of the close of business on Friday. Looks like they were up about a penny on the after hours there. 52-week range as low as $60.33, as high as $90.89. Now, actually, when I took a look at this on Friday, this was down in the $64 range. You can see it was up 1.52%. And when I took a look at it earlier in the week, it actually had dipped down at one point down to $62. So it was much closer to the 52-week low when I put this on my list. They have had a bit of a pop here towards the end of the week. So they may be starting to rebound here, as high as $90.89. Market cap of $37.06 billion, revenue of $20.2, net income of $2.44 billion, earnings per share $4.11. Priced earnings. Now this is a better priced earnings. This is more in line with what I'm looking for. Even lower, 15 or lower, really is the range I like to look at. $15.88 per share. Their forward dividend or forward PE is even lower than that, $14.55 per share. Dividend is $2.36 with a 3.62 dividend yield. Ex-dividend date was April 9th, or is April 9th. So this one is coming up. So if you were to buy them now, you would be in line for this April 9th ex-dividend and dividend payout, I think sometime in April as well. A beta of 0.13, so very low volatility, right? Very low volatility. If the market is 1, which it is, and under 1 is lower and over 1 is higher, this is the lowest volatile stock that we've looked at today. Analysts do call it a hold. They have a price target of $72.78. So they see about 11.52% upside on this one. Earnings date March 20th. Now let's look at the earnings forecast. Same thing. Price target $72.78 with 11.52% upside. A hold. 18 analysts have taken a look at this. Revenue growth at 2.4%. So this is a little lower than what we saw for the other two, but it is still expected to grow with an EPS, earnings per share growth forecasted at 5.57%. Again, I like 5% or better, so just over that metric. Now for revenue growth, you can see here since 2019, nice steady growth. They did have some issues back here from 2014 to 2017, it looks like. A little bit of a drop, leveled off from 2017 to 2018, and then back growing again. Slow grower, I will say that. It's not one that, it's not a Microsoft or an Apple or something like that. That's a real, or even a Starbucks. That's a real fast grower. So this is just a nice steady eddy, buy, dump money into it, and deal with the nice, slow, steady growth. Margins here. Gross margin 34.3%, operating margin 16.29%, pre-tax 14.83%, profit of 12%. So this is very close to what we saw for Starbucks. So you see that GIS, General Mills, revenue growth is very slow, but their profit margins are about the same as Starbucks. So I mean, you're entering a company like with similar numbers to Starbucks when you're entering even a General Mills, which is an old, boring company, and that's part of the reason I say Starbucks margins at 11% give me a little bit of concern if they are going to be facing unionization. EBITDA of 19.66%, EBIT of 16.99%, free cash margin of 11.47%. So very good numbers overall. This is actually one I'm considering selling out of my Kraft Heinz position and rolling those funds into General Mills just because I like the numbers better on General Mills. I see overall better numbers than Kraft Heinz. Dividend yield, this is the only thing that's a little lower. Dividend yield of 3.62%. Annual dividend, $2.36. Divide by 4, they are a quarterly payer. Ex-dividend date, April 9th. So again, coming up, if you were to buy them now, you would be in line for their next dividend. Low payout ratio, I like 75% or less. This is under 60, 57.42%. And highest dividend growth of the three, 9.26%. So boring, General Mills, very good numbers, high dividend growth. with a nice starting dividend yield, which is why I'm, again, thinking of flipping my Kraft Heinz position and rolling the funds from that sale into General Mills. Their dividend growth is higher. Their dividend yield currently is a little lower, but Kraft Heinz has no dividend growth to speak of. So this one is one American Water that we saw in the first one. I just added that to my portfolio. Starbucks is on my watch list. General Mills, I'm considering flipping my Kraft Heinz position and rolling those funds into General Mills here. Well, those are the three at or near 52-week lows that I like. What stocks at or near 52-week lows do you like? Do you even pay attention to 52-week lows? It's one of the metrics, or one of the things I look for. A company, when it gets close to its 52-week low, I start to get interested. Obviously, busting through a 52-week low and setting new 52-week lows would be even preferably. We want to buy things as cheap as possible. But it gives me an idea of where the market might be ignoring some companies, or where they may be rotating out of. And those are where I look for opportunities, right? I want to buy when other people are selling. I want to sell when other people are buying. I think Warren Buffett puts it, how does he put it? Be greedy when others are fearful, and be fearful when others are greedy. So that is what I'm looking to do whenever I'm looking at these companies at or near 52-week low. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And drop a comment down below. Let me know what you think of these three companies. Are there others at or near 52-week lows that you like better? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great weekend, and we'll see you in the next one. And don't forget to tune back in tomorrow, Sunday morning, 7:30 a.m. We'll be putting out our weekly updates on the portfolio. So don't forget to hit that subscribe button and hit that notification bell so you're notified whenever we put out any new content and you don't miss future videos like that one. We'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and managed money, so never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.